Today, I want to talk about how the Citadel and hedge fund RICO lawsuit has finally started. The short sellers are finally under investigation for collusion, and it's about to get a whole lot worse for them. So stay tuned and let's make some money. Also guys, just a quick one, the Christmas sale at the Millionaire Mindset Trading Group is now on. This is our largest ever sale where you can currently get $150 off the price of the lifetime membership or 50% off your first month of the monthly membership using the link in the description below and using the code CHRISTMAS, all in capitals, at checkout. So let's dive straight in with the key information. So we can see that short sellers are now under federal investigation for collusion. It says short sellers are now under federal investigation for collusion, resulting in the belief that firms are conducting orchestrated market manipulation tactics. The full article says there's been a lot of debate recently about short sellers and their strategies, especially after a lawsuit in Toronto revealed some surprising connections between investment firms and bearish researchers. That's now sparked debate among corporate leaders and federal investigators about whether these short sellers are working together more than they admit, per a recent Bloomberg report. In the lawsuit, Anson Funds had mentioned their firm had shared research with several well-known short sellers like Hindenburg Research and Muddy Waters. Now obviously we recognise all three of these names time and time again, as many of these people were involved in shorting both AMC and GameStop. Of course, these were just smaller firms involved in the shorting, but their names still crop up time and time again. And that existing lawsuit is part of a broader investigation by the US Justice Department and the SEC into whether some of these short-selling firms have crossed legal lines. And actually the questioning of Anson Funds went even deeper, as they were questioned about whether they'd shared research with half a dozen prominent names in the short-selling world, not just Hindenburg Research and Muddy Waters, but also half a dozen other additional short sellers. So it will be very interesting to see how far the Justice Department takes this investigation into the clear collusion between these short sellers and other short sellers and other research firms as well. But what's even more interesting is the Justice Department is clearly going down the RICO lawsuit path with their investigation. We know proper investigations take time, especially those investigations where people end up behind bars, and it seems the Justice Department is finally cracking down on these short sellers. Of course, we even have the proof, as Biotech Moose has replied, saying the Maxine Waters GameStop report showed about 24 hedge funds and family offices that were working together when they removed the buy button from more than one meme stock in January of 2021. Saying these hedge funds and short sellers were collectively shorting these stocks together, which is 100% in the RICO statute territory. Now, not only that, but Thomas Petterfy is once again talking about hedge funds and how hedge funds will soon be liquidated. So Thomas Petterfy posted and soon after recently deleted, saying over the last 3 months, our margin loans are up by 16%, which is a bit of an issue if you ask me, because I think that equity prices are somewhat overextended. And I hope these equity prices come down, but not come down too fast, so that we can liquidate hedge funds and customers as it happens, so that we don't end up holding the bag from people who are unable to meet their margin calls. So obviously when the price of a stock drops, if any hedge fund is shorting that stock or any individual customer is shorting that stock, they may experience a margin call. Now if they experience a margin call, all of their positions must be closed out of to cover and to repay that margin call. And of course, if their trading platform or prime broker can't close out of the positions fast enough, it's that trading platform or prime broker that ends up holding the bag and holding the additional liability. So we can see here in the first example, if a hedge fund has $50 million but isn't using any leverage and suffers a 10% drop on their portfolio, they then have $45 million. In the second example, let's say this hedge fund is using a 10-to-1 leverage ratio and has a $500 million portfolio, only with 50 million of their own money and 450 million that's borrowed, but takes a 10% drop on their entire portfolio. They only have 450 million left. Their $500 million portfolio has decreased to 450 million, which is a 50 million drop. Now, as I said, they only had 50 million of their own money. They've lost 50 million. So at that point, their hedge fund is bankrupt and they have $0 left. They are margin called successfully and their hedge fund is destroyed. But what Thomas Petterfy is talking about is something even worse, which is scenario 3. Let's say this hedge fund is using a 20-to-1 leverage ratio and has a $1 billion portfolio value. They've got $50 million of their own money and they've borrowed $950 million. Now, if their portfolio takes just a small 10% drop, they've only got $900 million left, which is of course a $100 million loss. Now, if they only had $50 million, they should have been margin called after just a 5% drop where they lost 50 million and their portfolio hit zero. But if the stocks are falling too fast and they take a 10% loss, that's a $100 million loss on their own money of just 50 million, meaning there's an extra $50 million liability and someone is left holding an additional $50 million bag. Now, Thomas Petterfy is saying that he hopes he can margin call his clients quick enough to just destroy their hedge fund without leaving him holding any additional liabilities, but this is always an extra risk if stocks are falling too fast. This is where things really start getting messy, because then at that point it's not just the hedge funds that are collapsed and margin called, but obviously these prime brokers like Bank of America, like Interactive Brokers, like any of these other big banks that are shelling out margin loans for these hedge funds end up in trouble as well. This is how you end up with not just 5, 10, 15 or 20 hedge funds going under, but where we also see some big banks like Bank of America or maybe Citibank or, you guessed it, Credit Suisse going under as well. Of course, when Archegos was margin called back in 2022, Archegos, the hedge fund, was of course destroyed and hit zero, but many of these other banks like Credit Suisse took on massive losses, upwards of $9, $10, $11 billion. So it wasn't just a small $50 loss that Credit Suisse suffered. These banks had lent out so much money in terms of margin loans, they were losing billions. And actually, that's even what Thomas Petterfy is saying as well. He said our margin loans are up 16%. We've been lending out so much money, so I really hope we don't end up losing billions as well. Now, I know all of you own AMC, but many of you also own crypto, gold, silver, and other alternative against the system investments. The price of gold has been hitting all-time highs this year, and the price of silver, while also hitting highs, has been massively suppressed by these big banks. Many of these banks have been fined billions of dollars for illegally shorting precious metals like gold and silver, and that's why now is the perfect time to discuss VZLA Silver Corporation, ticker symbol VZLA. You can see there's a number of analysts already covering this fantastic company. The stock is currently trading for around $2 per share on the New York Stock Exchange, but many of these top analysts have their price targets upwards of nearly $7 per share. So these analysts are seeing a massive upside. Many of these market-leading analysts have bullish buy ratings on VZLA, and some speculators even expect the price of silver to exceed $100 per ounce. Adjusted for inflation, silver is currently one of the most undervalued assets in the world. In the bigger picture, the price of silver is currently considerably below its all-time highs set nearly half a century ago. VZLA Silver Corporation already has some large institutional shareholders like billionaire Eric Sprott of Sprott Incorporated and Franklin Templeton. That means that VZLA won't be the target of short seller attacks, especially as this company has zero external debt and it has plenty of cash on hand. VZLA Silver is currently developing the Panuco silver gold project in Mexico, aiming for first silver production in 2027, only 2 years from now, and it has the potential to become the 10th highest producing silver mine in the world, producing up to 15.2 million ounces of silver equivalent per year, making it also the largest currently undeveloped mine in the world. The company intends to make a production decision only following the release of a positive feasibility study. If you didn't already know, Mexico is the leading producer of silver globally, and according to Global Data Mines and Project Database, there are more than 757 silver mines in operation worldwide, and 100 of those are in Mexico. Recently, another silver company, which owns a mine that is only half the size of the Panuco, was sold for $1.7 billion to one of the world's top silver producers. In comparison, VZLA's market cap is currently only $500 million. VZLA Silver has also established a clear and methodical path forward towards production at Panuco, backed by a strong financial position, as I mentioned earlier, with over $90 million of cash on hand and no debt. On top of that, global silver demand is forecast to reach 1.2 billion ounces this year in 2024 and even more in 2025, which would make it the second highest year on record according to the Silver Institute, showing the demand for silver is going up. We also know that silver excels and performs brilliantly during interest rate cuts. Soon after the rates are cut, the price of silver often spikes to new recent highs, and we know that more interest rate cuts are around the corner for the US, especially under a Trump presidency. So research VZLA Silver Corporation today, trading on the New York Stock Exchange with the ticker VZLA. As Finance Lancelot added, he said it was a little concerning that he promptly deleted that post, and really it's a little concerning that Thomas Petterfy is hoping equity prices fall slow enough so that he doesn't destroy his own company as well. Thomas Petterfy even said in this Bloomberg interview, saying that a downturn is a very big risk because margin balances have been growing very, very quickly. He said, "I wish that everyone please pay attention to these situations and try to take preventative measures and do not extend margins so easily." Now, this is actually also really interesting because what he's saying is that actually he's been lending out money to these hedge funds very quickly. Thomas Petterfy and likely other prime brokerages have been dashing out money left, right and centre to these hedge funds that are desperate for more money, and he hopes it doesn't come back to bite him. I think at this point, when the downturn does come and when equity prices start dropping fast, many of these prime brokerages, many of these trading platforms are going to end up being destroyed in the process, not just liquidating 10 or 20 hedge funds, but destroying some of these big institutions as well. And of course, when all of these hedge funds and institutions start getting liquidated all at the same time, there's going to be some outliers of stocks that are heavily shorted in different places of the market that end up short squeezing in a very big way. Now, that is a guaranteed fact. During a downturn, liquidations do happen even on a big scale. Look at 2008. Bear Stearns and Lehman Brothers were liquidated. These hedge funds, banks, institutions, none of them can escape liquidation, and that is a fact. What is also a fact is that stocks in different positions of the market will end up squeezing. It happened in 2008 with Volkswagen, and it's a guaranteed fact it will happen again. Now, obviously, I can't tell you with guaranteed fact which stocks are going to be the stocks that short squeeze when these prices start falling, but hopefully many of us have some good ideas. Something that I also find very interesting, albeit separate, is that Charles Payne is actually still holding his original positions in AMC and GameStop. I love that Charles Payne is still supporting the movement. I love that Charles Payne is still with us every single step of the way, and I can't wait to see what's in store for Charles Payne and for everybody else in the AMC and GameStop movement. So guys, be sure to let me know what you think down in the comments below, and as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers!